So you're ready to purchase your first home. Well, before you get out there and start searching for homes, the very first step that you must follow is getting pre-approved. And in today's video, I'm going to go over the pre-approval process, all the documents needed, why you must get pre-approved, and at the end of the video, I'll go over a full checklist of items needed. My name is Duane Vizinau. I'm a national wholesale lender and a certified government underwriter. Let's go ahead and get into it. Now, let's first talk about why you must get pre-approved. And the first reason is that there are two individuals involved. There's a listing agent representing the seller, and there's a buyer's agent who represents you, the buyer. So when you are ready to place an offer on a home that you'd like to purchase, the buyer's agent submits the offer on your behalf. Now, included in that offer are two documents. There's the purchase contract, which outlines the terms and conditions for which you're agreeing to purchase that home. And the other document is the pre-approval letter. But since you don't have that letter, neither the listing agent or the buyer's agent can take you serious because they don't know that you can afford that home, and neither do you. And that brings me to reason number two. Know your budget. Know exactly how much you can afford. When you apply to get pre-approved with the lender, your credit, income, and assets are all reviewed. And based on that review, that lets the lender know how much you can afford. Therefore, the pre-approval letter is specific to how much you can afford and how much you can purchase based on your budget. Now, the next reason is that it speeds up the buying process. Because the income, credit, and assets are all reviewed, that makes the process so much quicker when you get into contract. And in fact, the buyer's agent reaches out to me when you're all ready to place an offer, and they ask me, the loan officer, to reach out to the listing agent. And I am required to let the listing agent know that your income, credit, and assets have been reviewed. And it can also lead to a conversation of how quick I can close, which can help you get your offer accepted. Now, the next reason is that, unfortunately, I've had individuals apply to get pre-approved, and at that time, they couldn't get pre-approved because they didn't have the credit score or they didn't earn enough income. But with a little bit of guidance on helping them get their credit scores increased or working more overtime, getting a cosigner, eventually they were able to purchase. Now let's go over all the documents you need in order to get pre-approved, and we're going to start off with identifying yourself, and that's going to be a valid photo ID. So driver's license or passport is acceptable. Just make sure that it's valid. And the next one is going to be your social security number. There are programs out there for I-10 individuals, so you can still apply to get pre-approved, but 99% of the programs out there will require a social security number. And the next one is for non-U.S. citizens. If you are a non-U.S. citizen, you can get pre-approved with a green card or like a work visa. Just make sure that you consult with your loan officer before you apply to make sure that the type of visa that you have is acceptable. And lastly, please make sure that this is valid before you apply. The process with immigration, as you know, is lengthy. The last thing you want to do is have this expire during the process. So before you even apply to get pre-approved, make sure that your visa is valid. Credit information. Here, I'm going to talk about the two types of credit reports the lenders offer, as well as how you can make sure to get the highest credit score possible and the highest pre-approved amount when you apply. Now, the lender is going to review your credit score, debts, and history, and they have two options. You can do a hard credit check, which will leave an inquiry on your credit, but that credit report is good for 90 days. While you are searching for a home, you'll know that that credit report is not going to expire, and the credit score reflected on that report will be used for the next 90 days. Now, the next one is the soft credit check. But the soft credit check is only good for that day. It doesn't leave an inquiry, which is great. But if anything changes on your credit report right after it's ran, that can jeopardize your pre-approval. If you're a serious buyer, just go with the hard credit check. If you know you have, unfortunately, some derogatory credit, collections, charge-offs, late payments, then possibly go with the soft credit check just so you can maybe get some guidance on how to get that credit score up. And the next one is going to be avoid large purchases. And I'm going to give you an example here. Let's say you have two individuals earning the same amount of income monthly, but one of them has a car payment of $1,000 a month and the other does not. Well, the one that does not have the car payment is going to get pre-approved at a higher amount because their debt to income ratio is lower. And I do have a video explaining what debt to income ratios are. You want to check that out. But essentially, the one without the car payment, their gross monthly income divided by their debts is lower than the individual with the car payment, so they get pre-approved for a higher amount. So avoid large purchases if you can. And the next one is going to be don't open or close credit lines. Opening credit lines is inquiries, and those leave your credit score a little bit lower. So avoid any opening of credit lines. And that also means that if you add on debt, that impacts your debt to income ratio, which I just explained. You don't want to have a high debt to income ratio. You want to have the lowest possible, no debt if you can, to get the highest pre-approved amount. Now, closing accounts can also jeopardize your credit score, and that's even if you pay off an auto. Once you pay off an account and it closes, then your credit score goes down. So try to avoid closing accounts, credit cards, auto loans, or anything like that if possible. And the next one is going to be don't pay off any collections or charge-offs. And you would think that paying these off would help your credit score, but the only time you want to pay off collections and charge-offs is if the creditor agrees to delete it. And I said delete from your credit. And you want to get that in writing too. If they agree to do that, then yes, 100% pay them off. That will help your credit score increase significantly. But if they don't agree to delete them from your credit report, do not pay them off. If you pay them and it's not deleted, that will lower your credit score. And the next one is going to be make all credit payments on time. Now, to me, this one should be obvious. If you are behind, let's say you're past due on anything, then the last thing you should be doing right now is applying to purchase a home, because that does not show credit worthiness. You're trying to ask a lender for hundreds of thousands of dollars. So you want to show them that you can make your payments on time. Now, FHA will let you apply with past due accounts, but you can't get pre-approved until you bring those accounts current. So every type of credit debt that you have, or even your rent, you don't want to go behind on your rent, because there are programs that will require the lender to confirm that you're paying your rent on time. So credit debts, rent, all of that, make sure that you're current before you even try to get pre-approved. Debts and obligations. So here I'm going to go over all the debts and obligations that are included in your debt to income ratio. And I do have a video explaining what debt to income ratios are. Be sure to check that out. So the first one is going to be student loans, and student loans are counted in your debt to income ratio, even if they're deferred. Now, there are programs that will allow income-based repayment student loans to be excluded. Just consult with your loan officer to see if you can get pre-approved for those type of programs. And then the next one is going to be car loans or motorcycles, boats, or whatnot. All of these are included in your debt to income ratio. If you have an auto loan that has less than 10 months due, then you may be able to exclude that payment from your debt to income ratios. Just consult with your loan officer. But if it's a lease, even if it's one payment left, that will be counted in your debt to income ratio. And the next one is going to be credit card balances. So my suggestion here is before you even apply, is you make sure your balances are 20% or lower. And then you want to wait until the statement comes out, because whatever's showing on the statement is what's reported to the credit agencies. And if you have your balances 20% or lower, this will make sure that you get the highest credit score possible. Now, the next one here is going to be child support or alimony payments. And these don't always show on the credit report, but if you do pay child support or alimony, you must disclose this on the application. There is a section where you will check the box stating that you are paying these. Lenders have ways of finding things out, so just be honest on the application, and these are included in your debt to income ratios. You'll just have to provide the terms and conditions for how long and what payments you're making for these type of debts. Next is going to be mortgage loans, or real estate for that matter. Anything that you have ownership of and it's a real estate property, even if there is no lien on it and it's free and clear. If you're on title, then that's home ownership, and you must disclose that on the application. Again, lenders have ways of finding things out. And even on a free and clear property, there's taxes and insurance associated with the property that must be included in your debt to income ratio. Or even if there's a mortgage loan that you co-sign, that is going to be included as well. Before we move forward, if you are seeking to get pre-approved, I'd love to assist. As I mentioned in the beginning of the video, I am a former and certified government underwriter. I used to underwrite FHA loans, jumbo loans, conventional loans. The only loan I never underwrote was VA loans. I'm not certified for that, but my experience as an underwriter helps me with making sure that when I review a file and I submit it to a lender, it's almost as if it's already underwritten. And then let's say that the underwriter requests a document that's not needed. Well, I know that up front, and I can go back and have a conversation with that underwriter and possibly get that condition waived. It just helps with time. It saves time with me knowing exactly where to review guidelines. I don't have to go to a manager. I don't even have a manager, but it just saves time in knowing that I have this experience as an underwriter, calculating income, reviewing documents, reviewing bank statements, and it just simplifies the process and helps you out 100%. If you are seeking to get pre-approved, there's 3 ways you can scan that barcode, go to my website there, or you can click the link within my bio. Now let's go over the income documents you'll have to provide. So the first one is going to be 30 days of pay stubs. If you are paid every week, then that's going to be a pay stub, 4 to 5 pay stubs. If you get paid twice a month, then that's going to be 2 pay stubs. And this is going to be the most recent pay stubs covering 30 days. And then the next one is going to be W-2 forms. And if you worked 10 jobs, because you see it's for the last 2 years, if you worked 10 jobs in the last 2 years, then you have to provide a W-2 for all 10 employers. And lenders run an IRS transcript on W-2s and tax returns. So they'll know if you did not provide a W-2 or a tax return, whichever is needed, and you can't provide anything in lieu of that W-2. You must provide the W-2, and that's for the last 2 years. And the next one is for the tax returns. If you're self-employed, you get rental property income, royalty income, gambling. Then you'll provide your tax returns. If you have business returns, 1065s, 1120s, 1120s, then you'll have to provide those as well. All schedules of the federal tax return, not state. Then the next one is going to be profit and loss. If you're self-employed, you're familiar with the P&L. Now, this must be prepared by a CPA. You cannot self-prepare. And the next one is going to be Social Security, alimony, retirement, passive income. For this income, you'll provide the award letter showing the terms and conditions for which you're receiving the income. You'll also need to provide a most recent bank statement showing that you've recently received that income. And for some of this type of income, you'll have to show that it will continue for at least the next 3 years. Now let's go over the employment information. And this is the information you will input within the online application. My suggestion is to get all of this information ready so that when you apply, it's just boom, real quick for you. So the first one is going to be employer contact information. And this means you'll have to have the company's name, the company address, the company phone number, your job title, start date, end date. All of that information must be listed on the application. And again, if you work 10 jobs in the last 2 years, then you'll have to input every single employer that you had for all the W-2s that you've had for the last 2 years. Just make sure you have that. And then the employment history is going to be a minimum of 2 years. Now, if you were in school, though, let's say you were in college or nursing school or any type of certificate that you can show that you were in school, that can be used in lieu of employment history, which is great. So you don't always need the 2-year history if you were in school. And the next one is going to be explanation of job gaps or changes. So here, if you had any job gap in excess of 30 days, you'll have to provide a letter of explanation for that. But let's say that you had a job gap of a year and you've been back to work for like 6 months to a year. But prior to that job gap of a year, you worked 2 years in a row. What you want to do on the application is show that 2 years on the application and then the gap, and then you're back to work, because your whole goal is to show income stability. You can hold a job. If you go back and show that you worked prior to that and you had consecutive years of working, then that just helps your case. So don't be lazy with it. You want to show this. This is the whole point of this section within the application is to show that you can hold a job. If you did have the gap, that's okay, but just make sure you reflect the consecutive job history prior to the gap. Asset documentation. These are the documents you will provide to show proof you have the funds for your down payment, closing costs, or reserves. And the first one is going to be your bank statement, 2 months worth, and all pages. If the last page shows 10 of 10, but it's a blank page and it just shows that 10 of 10, you still have to provide that. The underwriter will request that. So make sure that you provide all pages of the most recent 2 months bank statements. And the next one is going to be a retirement account. Yes, you can use your 401k, your retirement account, to purchase a home. If it's employer-based, though, just make sure that you include the terms and conditions that allow you to withdraw from that account. And the next one is going to be a gift letters. Now, yes, you can get a gift from a family member, close relative, to purchase a home. True story, I had an individual get a gift from 16 family members one time. They all provided like $1,000, $2,000, and it helped them get into a home. Just make sure that you let your loan officer know you're getting a gift so you can get the letter, because you just don't type up anything. There's a specific letter that's required to be completed. And then make sure you ask them how you go about sourcing the gift and showing proof that you received the gift, because there's a whole process for that as well. Now let's go over some miscellaneous items that may be required. And that's going to be a divorce decree. If you went through a divorce, you may have wanted to throw those away, but don't do that. The lender may request those. Next is going to be a bankruptcy discharge papers. Sometimes the credit report will show that it's discharged and it may not. So the lender may request those. So don't throw those away as well. Next is rental history. And I mentioned this earlier in the video. There are programs that the lender may require to confirm and verify that you've been making your rent on time. So you'll have to provide your lease agreement and then proof 12 to 24 months, depending on the program, that you've been making this payment on time. And even when you get in contract, you don't want to stop making your rent payment, because you don't know how long that process may take. You may cancel that one, move on to a next home. So always make sure you're paying your rent on time. Next is going to be explanation letters for credit issues or deposits. So if you had any collections, charge-offs, or late payments, you will have to write a letter of explanation for why you had that derogatory accounts. And then deposits or transfers. If you have any deposits or transfers going into your bank account and they're not from your employer, and let's say that you earn $5,000 a month, but you have a $10,000 deposit, well, you have to trail that and explain where you got that from. Or even if you have a ton of $2,000 deposits, even though you make $5,000 a month, if it's, too many of those deposits, the lender will request for you to explain where you got those from and trail where you got that from. So make sure that you're aware of the deposits going into your bank account. All right, here, let's go over the checklist of items needed. And there is a link within my bio for you to download the pre-approval checklist. So let's go ahead and get into it. The valid photo ID, make sure that is valid. Passport, driver's license, work visa, all of those work. Next is going to be your credit information, which is your social security number or your I-10. You can still apply with one of those. And then the next one is going to be your 2-year employment history. Again, you can use schooling if you were in school in lieu of the employment history. But again, if you worked, it doesn't matter how many jobs that you worked in the past 2 years, they all have to be reflected on the loan application. Next is going to be your recent pay stubs covering 30 days. Again, if you get paid once a week, then that's 4 to 5 pay stubs. Twice a month, then that's 2 pay stubs. The next is going to be your 2-year tax returns. 10 jobs in the last 2 years, 10 W-2s. You have to provide all W-2s. There's nothing in lieu that you can provide other than the W-2. Then the next one is going to be your tax returns, all schedules of the federal, whether that be your personal or business tax returns. You make sure you provide all schedules. And then the last one is your 2 months bank statements to show proof of your funds for your down payment, closing costs, and reserves. Now let's go over next steps. So what you're going to do is complete the online application. You're going to locate and contact a loan officer, go to your local bank or whatnot. I am a loan officer. You can scan the barcode on my screen or go to the website, and that will take you directly to my online application. Then the lender will check your credit. Again, I suggest doing the hard credit check. It does leave an inquiry, but it's good for 90 days if you're a serious buyer. Avoid doing the soft credit check. That's my personal opinion. Then you're going to provide the documents that the lender requested and only provide what the lender requested of you. If the lender asks for W-2s, don't provide tax returns. Over documenting is a big no-no in my industry. Only provide what the lenders requested of you. Trust me. Then, depending on how many people are on the loan, how many properties you own, businesses you own, it could take 1 to 3 business days. And then after that, you get your pre-approval letter, hand it to your buyer's agent, and start searching for homes. There you have it, the pre-approval process, the very first step before you go out and start searching for homes. If you'd like to have a one-on-one with me, you can see that barcode on your screen for a free 30-minute Zoom consultation. There's also a link within my bio. I hope you feel like this information was useful. If so, please like and subscribe, and I'll see you on the next video.